He's the managing director of Kenswitch, and one thing I'm interested in is how he got competing financial institutions to agree to share one platform. I wouldn't do that if I didn't know exactly how it works.
Kenswitch was born out of a need from the market. And it's interesting that you should mention that a lot of the banks that had already invested in the infrastructure did not want to open up that infrastructure to competing. Yeah, yes. Because it gave them a strategic advantage.
Right.
There was not much impetus until the central bank became involved and rolled out Kenswitch under its modernization and reform process of the payment system.
Yes.
So it's a bit of the legislator and also a need from the market to compete. So initially we target the small and medium-sized banks, but as our network grew, the banks that had locked out their networks saw the value of opening up their networks, because there's also a value proposition.
Yes.
Because when third parties come and use the infrastructure, they also get a revenue share on that.
And the shared infrastructure is great for cutting costs.
Oh, absolutely. We avoid this scenario where we have in shopping malls. You know, we have a whole floor dedicated to ATMs.
Right.
And some of those ATMs are not fully optimized. So what tends to happen is that the bank, like the casino, never loses.
Yes.
So in the end, you're going to pay for that infrastructure one way or the other. And what it normally translates into is high interest rates, which of course the government is trying to bring it down so that we have easy access to credit in terms of achieving our financial pillar and the Vision 2030.
So right now they share infrastructure, that's great, but how do you manage to move money from one bank to the other and in the simplest, probably the most effective way possible? That is not there yet.
Yes, when you look at, if I want to give you money,
yes.
I can either give you cash, I go to an ATM, withdraw money and hand you cash. Alternatively, I can go to your bank's branch and deposit the money over the counter.
Or I can write you a check.
Yes, another instrument that is used is a check. And what Kenswitch has done is that we've developed a mobile-based service called Kenswitch Mobile that allows us now for you, first of all, you register your mobile phone and associate it with your bank account. And this is done at the ATM, at the bank's branch, or you can do it directly from your mobile phone. Once you have that application running on your phone, you're able to send money across from one bank to another within 6 seconds. So for us, we're looking at the value is instant, and you avoid the risk associated with that check, where I can write you a bouncing check.
Right.
So that is where we are positioning that product. And also we can make payments up to 1 million shillings per transaction. So we are opening up a whole new sector in terms of payments within the country.
What is needed to get that, and when would we have it? It looks very futuristic.
It's actually, we have about 13 of our banks are engaging their back-end systems in order to take in a deposit. Initially the banks had what we called a debit transaction, and now we want to put in a credit transaction. Thereby the customers now will be able to take in a direct deposit. So what is happening is right now we are creating the environment in terms of the ecosystem that will facilitate that payment to come through.
The one aspect of financial institutions which people complain about is charges, and some people say, for example, I should not be charged to withdraw money from an ATM. And as a infrastructure provider like yourself, I'm sure you depend on some of those charges. So how do you handle that cost aspect to make sure that the customers still want to come onto your platform, but they're not overcharged, for instance?
As a switch, our business model is based on, we charge a fee per transaction.
Right.
And the more transactions that you pass through the switch, the lower the cost per transaction obviously is. And we pass that on to the banks. So eventually what should happen is that you see a translation in terms of the banks lowering their fees. However, that's not always the case because the banks also, the cost of rolling out some of these devices is pretty expensive, and to maintain that infrastructure, that cost has to remain in place. We have seen moves within the financial sector where we have one particular player who's gone into the market and is not providing or charging a fee for an ATM transaction.
Right.
And this is a model that we've seen even in India, where customers are not being charged for ATM transactions, but the banks absorb the cost. However, one of the ways in order for the banks to facilitate that, they also have to look at lowering their costs and also, sharing infrastructure, so that, especially under agency banking, under the Kenswitch model, where that cost reduction will be passed on to the customer. But while they may have waived the fees, the costs have not been waived. Those costs are still being incurred, and somebody has to carry those costs.
Would you survive in an area or in an arena where, let's say, all the financial institutions on your platform were to waive their charges?
Oh yes, we would, because they would waive their charges, but we charge the financial institution.
Yes.
We always charge them, just like the bank can offer a free service. However, the ATM, somebody who's providing the ATM will not provide it for free. The banks will still bear that cost. It's how efficient the bank is and how many transactions they put through that particular infrastructure that will bear returns in terms of gains. Because you can be rest assured, in fact, one of the questions asking, is this a promotion or is this a permanent tariff?
Yes.
And for the bank, I think for the timing is that they want to increase the number of customers who are coming in and increase their deposit base. So it may be a short-term strategic objective.
All right, finally, this is a bit of up in the air, but what is your sense of the financial institutions, financial services industry in Kenya in terms of the services they provide and everything?
When you first talked about financial sector, you know, before people used to think about commercial banks.
Right.
I think you had a guest on earlier in the show where we are having MFIs providing deposit taking. So we are moving away from your traditional commercial banks, and we're even seeing the mobile network operators coming in and providing financial services. So the payments industry is growing. The financial sector is deepening, and we also have a convergence in terms of technology and the way people are accessing their funds. One of the key, I think, going forward is the internet will become, a key driver in terms of financial transactions. A lot of people are accessing the internet. I think the number that was given by CCK is about 6.4 million.
Right.
A lot of them are using it for Facebook, but we're saying now take these guys off Facebook and start providing them with the value. And that's the way we are seeing the financial sector developing going forward.
All right, very fascinating insights, George Wainaina, MD Kenswitch. Thanks for dropping by.
Thank you.